Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin costs to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, welcome back to another episode of the Real Estate Investing Club Daily Deal Review. Today we have Brock Mogensen with us. If you missed his full episode, go back maybe one or two episodes before this episode, and you can listen to his full episode. I just said episode like 100 times there. Brock goes really deep into underwriting, gives us a lot of good nuggets of wisdom there. So check out his full episode, one or two behind us. But today we're here to talk about his property. So Brock, where was this property located?
This one I'm going to choose is in Milwaukee, Wisconsin. Wisconsin is, it's got to be cold out there. I've never been, but I've seen videos or movies based in Wisconsin, and there's always snow. Chilly.
What type of property was it?
C-class apartment building.
C-class apartment. Love it. How many units?
89.
89 C-class apartment. Love it. All right. So how did you go about finding this property?
It was through a broker. So I was actually under contract once or twice and fell out, came in, swooped it in for the right price.
I love it, man. So this is many people have said this before on the Real Estate Investing Club. It just keeps being repeated. You need to network in real estate. Real estate is a team-based sport. It is one where you got to meet people, and so many deals can come through brokers, through just people you've met in the game. So keep going out there, keep meeting people. And Brock is a perfect example of this, talking through the broker. So you found it through the broker. Why'd you decide this was a good deal? Why'd you want to buy it?
We saw it as being the right size type of deal we were targeting. That was kind of the size and class of deal we were looking for. Numbers made sense, and there was it checked the boxes for value add components we were looking for, and that's really what ultimately led us to go for it.
Awesome. So it had good value add potential. I love it. And how'd you go about financing it?
We used agency debt. So we did a Fannie Mae loan on that one, and then raise the capital through syndication to buy it, and yeah.
Perfect. I love it. And so you've already mentioned this. This was a value add deal. What did you go about adding to the property? What was the value add there?
So the value add, there was maybe several components of it. One of them being the expense ratio. We wanted to bring that expense ratio down, felt we could through eliminating some expenses or at least decreasing some expenses. There was room for increasing rents, although the rent increase wasn't the majority component of it. There was some opportunity to, put in some hardwood floors and increase the rents. And that's really what we've done, cleaning up the common areas. We've done that. And really ultimately, as we, got deeper into it, the biggest value add component is turning out to be just the reputation of that property. Was when we bought it, it was the worst on the block. A lot of problems and crime going on there. We've implemented the systems now where it's the cleanest property in that area.
Man, reputation matters a lot, especially if you can turn it around. So your value add, you decreased expenses, you increased rents, and by doing so, you increase the reputation or improve the reputation in the area as a good place to live. Go a little bit deeper into decreasing expenses. What specifically did you do in order to decrease the expenses?
So we saw it as they had so 89 units, and they had a full-time maintenance person on there, and then a full-time property manager on there who was getting paid. The person was more of a like regional type, was getting paid a higher salary than we thought was necessary for that property. So we were able to cut back a little bit there, and bring someone in that's doing a very good job there on site, but that we were able to eliminate a little bit of the expenses there. I didn't need quite as many hours for an 89 unit apartment building with, two full-time people. Stuff like that. We were able to subtract some of the contract service expenses. And as I alluded to on my earlier podcast is, that was a mistake we probably made, was we didn't perform with that out long enough. That's why I kind of emphasized that on our previous episode was, we should have probably performed with that out over we're getting there now, after a few years, but we assumed we would get that in year one. It takes a few years for stuff like that to really, come around.
Yep. That makes sense. So how'd you go about exiting? What was the exit? Is this a long-term hold, a flip?
So we still hold that one. The performer on that is a 7-year hold. So the loan structure we got on that was pretty favorable, where after year 7, prepayment penalty is over, and then it's a 10-year loan. So we have a 3-year window there to sell. So that's kind of our goal, is once that prepayment ends, sell it in that 3-year window.
Gotcha. So now going to the numbers. What'd you buy? What'd you put into it? And what's your pro forma exit?
So we bought it for $3.55 million. We put in, I don't know offhand, I'd say at least $200,000 into upgrades and security enhancements and everything, for our value add component. And then our exit, our pro forma exit, and it's conservative, would be to sell it for, a little over $4 million. So, and that's over, 7-8 year hold period. So, just really assuming a conservative exit cap on that.
Okay. And conservative is always good. You never want to be not conservative, because that's how you lose money in real estate. So this is the last question. And this is an opportunity for you to just tell us anything about the property. What was the biggest lesson you learned through this experience?
Biggest lesson I learned on this one would be to, when you're buying an asset class, especially a C class one like that, multifamily, to really do deeper due diligence on going in and examining the current tenant base. So instead of, obviously you review the leases and you do this and that, but really spending more time. I think this really applies to more, the larger deals when there's a lot more tenants on there, and it's more of a community type. Go in there and really I would have gone there, on a Friday night a few times and see what it looks like on a Friday night at midnight, 1 a.m. I would, spoke to more people around the property. Maybe I just randomly walked on a Saturday and say, hey, what's going on with this property? What does it look like? And it's doing more like ghost interviews like that to really understand. We knew going into that one that it was a little rougher and there was some crime going on there, but I don't think we had the full picture going in. Ultimately, it turned around and it's working out. But if we would have had a better idea going in, how bad it was with everything that, all the drugs and crime going on there, we would have, I think, had a better, more scoped out plan, at least heading into it.
Yep. Yeah, it's funny. You are actually the second person today that has mentioned lacking the foresight into the crime in an area before they invested in an asset. So that just goes to show everybody listening and watching, when you're buying a large asset, make sure, any asset really, make sure you understand the demographics of the area. Call the local police station, see what they think about the area. Call the city, really get into the location itself to understand what's going on. Property managers are all also a really great resource that you can lean on in order to understand what a demographic is like. So that ends it here, Brock. I can't speak today. That ends it for the daily deal review. Brock, thank you very much for hopping on the show.
Thanks for having me on, Gabe.
Absolutely. For everybody who's here with us today, thank you guys for showing up. As always, you are the reason that we do this, so we appreciate having you here. The best way to support the show is just to subscribe, like, share this episode with your friends and family. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the 3 most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you were able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the ebook bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day, an even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.